The sine cosine moment of truth has finally been initiated. Turn it up to ×2 speed to prepare for the initiation of timification. Cryptillians and crypto crackheads, I hope you're ready. New viewers, what I do on this channel is I stress doing two things, and I try to do it every single video. Is first, I address the biggest problem you're making in crypto is when you hit buy, you don't know how likely it is of being in a statistically probable winning trade. And two, the second biggest mistake that you're making is the second thing I try to address regularly is I turn you from a buyer and a prayer who never sells anything and just watches it go down in moments like this into a profit pimp who knows at strategic times to take profits. So then you can buy more crypto when it goes down. So that's the two things we do on this channel. If that sounds good, watch through the end of the video. And if you happen to like the content, hit subscribe, hit the like. But if you happen to subscribe, I need you to let me know which crypto pronoun that you want to choose, cryptillian or crypto crackhead. So if that sounds good, new viewers, you also want to turn it up to ×2 speed because timification is simply more fun in that way. So let's get after it. I made several sine and cosine videos maybe around the time the very first people were talking about Wyckoff distribution on Bitcoin. Before it was a real thing, and before, you know, that big dip from 58K, that lower high happened. And I'll just put it on chart here before this happened. So I was making sine cosine videos knowing that Bitcoin was moving sideways as Ethereum was moving up, with the idea that they would end up taking turns or just behaving differently. And recently I made a video, my most recent sine cosine video, I mentioned that the next time they collide like this and they cross, I think it's going to stop being sine cosine. I think they're going to start moving in unison in general directions. And I mentioned very specifically in that video what target I thought it was, and I said it's the daily 200 EMA. I said I think that's the exact middle point. Once both assets prices are at or just around the daily 200 EMA, or structured similarly, postured similarly, either both on top or both on bottom or both hovering around, doesn't matter. When they are postured similarly or the same to the daily 200 EMA, which is this orange line, which is the average price over 200 days with slight favoritism towards the most recent prices, which is why it's an exponential moving average EMA. But anyway, and so that moment has now come. In a YouTube live video, I don't think it was a Patreon exclusive video, on Ethereum, way before Ethereum started coming down here, I said, I think Ethereum is going to come to this box, because what I did was I drew out the daily 200 and I said, I think it's going to hit the daily 200 somewhere between this point and this point. And I said, I don't know if it's going to hit the top of the daily 200 and right there, as Bitcoin maybe is also at the top. I don't know if it's going to hit the bottom and stay under. I don't know if it's going to hit it at the beginning of this box or the end of the box, but I almost certain I just have a feeling it's going to hit that box. And when it hits this box, even if it just pings off of it, hits the top, that will be the moment that the two assets have collided. And that will be the moment they're going to start moving together. I think I did that quite a while ago, over a week, probably 2 weeks ago, somewhere around here. It might have been here when it made another higher low, lower high. Yeah, it's probably about here. So June 14th. Yeah, so a week and a half, 2 weeks ago. So this box has been sitting here on my charts for quite some time. I've been making fewer YouTube videos because I've been churning out more content for my patrons recently. So since YouTube folks in general are less interested, I've been more time and effort into Patreon. But anyway, so look here, look at the 200. So that's the orange line. That's where price is. Look at Bitcoin. It's also in the same exact posture. In those videos, I did not speculate whether they would both move up together, down together, or chop sideways together. But whichever one does, I think both will do. Right now, it seems that the Wyckoff distribution, Wyckoff accumulation. So if you want to Google Wyckoff accumulation, so there's a distribution chart, which is this. The accumulation is the stuff down here on the Wyckoff. It's the accumulation chart number 1. It seems that Bitcoin is following it to a T, which indicates that it's mostly going to be sideways choppy movement should those market orchestrators, of which there are probably a handful. It's not just one big person doing it. It's several people who are in on it together. And when, if they keep their computer algorithms going to print price action the way they see fit, bait people one way, bait people another. It's all baiting. It's baiting and baiting and baiting. It's just a bunch of traps. That's why it's trapping. It's trapping you, trapping you, trapping you. It's leading people to believe, just like all of this was a trap, right? And while this was happening, guess what happened as this false rally was happening? That's when they chose to pump Ethereum in a way that it's never been pumped ever. So this was the first big trap. And honestly, I was saying traps over here as well. But this is all trappy stuff, folks. That's what the Wyckoff pattern is. It's traps over and over and over until it's just, they say, okay, we have enough money. We can go to the Bahamas for a few years until we screw people over again, right? Or attempt to. They're not, market orchestrators aren't always successful. And sometimes they lose a lot of money. So if you could see this candle that comes in on April 26th, guess what Ethereum started doing on April 26th? And I will go to a cleaner chart for 4-hour short-term ribbons. I'm going to do it on Coinbase. I think that's my clean chart. Yes. So you can see here clearly in this box that price during this monster run stayed at the very, very, very top of the ribbons the entire time. And if you go back in time, you can't find a single other time that a nice run has done that. Not one single time. In all runs, like this is a nice run. Not only did it hit the bottom of the ribbons, but the ribbons flipped. Like completely flipped bearish for a little bit, right? Ethereum doesn't move like that. So I said, what did I say? April 26th on the beginning of the Bitcoin trap. Look, when did this big candle get printed? April 25th. Day before. It all aligns. So all of this price action, it's not real. Like, I guess it's real because it happened, but this is not from mass psychology of buyers, sellers, and miners. That's not what this is. This was propped up by the exact same people who were printing this exact shape and who continue printing an exact shape, okay? So with that, as I was really wrong a few YouTube videos ago, since I thought I had an extremely statistically probable trade, I realized, shit, it's just printing Wyckoff still. So the first Wyckoff accumulation, the number 1, indicates that this was not the ultimate low. It says we'll make a couple higher highs and get rejected somewhere before 40K before this one. We'll make a high that's lower than this high and then make our ultimate low, which on the chart, it kind of looks like it might hit the weekly 89. So if you go to the weekly chart, normal EMAs, it looks like, so see, I just kind of drew that down and that would hit the 89. And that's kind of how the chart does it too on the Wyckoff pattern. The interesting thing is, the reason I was so wrong in one of those recent videos is because it had 100% hit rate. And it wasn't just like 2 or 3 times. It was like 7 and 8, 9 times, right? 100% hit rate. That's why I thought I had a highly probable trade. And I realized, crap, Bitcoin is simply doing things that it's never done before because this is not how it moves. This is orchestration. This is not mass psychology. It's not mass psychology. So stop thinking it's going to move like mass psychology. It's not. So mass psychology, 100% of times in history where Bitcoin cannot hold the weekly 55 and price touches or even goes anywhere close to this 89, 100% of times in history, it's gone down to the 200, which right now is sitting well under 20K. 100% of times. Not a single exception from, some higher toppy formation. Not a single time. I mean, since I'm on the weekly, I guess we could just look at it real fast. Okay, so you had a high, and you came down to touch it. Sure, you had a bull trap, clear bull trap, all fabricated to trap people, and then bam, hit the orange line. So the idea is that the purple line never holds price, not once. Look, it looked like it was going to hold price for months. I mean, look how long this was. That's 150 days. And then you had the squeeze play. In the bad sense, the 10 squeeze price below it. See, very clear squeeze play. Very powerful squeeze play too. Hopefully that's not happening now. Oof. It's pretty far away from a squeeze play, but this is mass market psychology, right? So so every time it hits the purple line, it always fails and goes to the orange line. Let's go to the last time. It just ignored the line here. Like the red 10 just squeezed it quickly, like the soap went, out real fast and it hit the orange line. So that's every single time in all of Bitcoin history. 100% of times this has failed. However, that's mass market psychology, or mass psychology, like a lot of people. I think one of the most probable situations in this midterm up until New Year, so let's say this is January, up until this point, I actually think that one of the most probables is that it will do something it's never done before, because it's simply, these are orchestrators printing this price. It will not move as it used to move. I think this could be the first time in Bitcoin history, similar to how it's the first time in Bitcoin history that squeeze play did not pan out. I think this, if the Wyckoff pattern number 1 is the one that plays out, I think it could be the first time in history that it does rebound and ends up rallying from there. Maybe after some sideways choppiness, but it doesn't come down to the 200. I think there's a strong chance that happens. I don't know if it's 50% or 40% or 30%, but I think it's in the double-digit percentage, and it's going to be my top 3 probables of what's going to happen between now and January. Another top 3 most probable is that it breaks down and comes under 20K and hits this. It's not very probable that it stops somewhere in the middle of 20. So it's not very probable at all. Actually, I don't think that's the top 3 most probable. I think it's going to either bounce off here based off of not being mass market psychology, or the orchestrators will stop printing the Wyckoff pattern. They'll give it up. They'll be done. Then the mass market psychology takes over, and then it goes down to 20K. It could happen. Or that could be the relief. Maybe most of the orchestrators, it's mostly sell pressure down. It's suppressing. Reading the order books, how much buy pressure is there? Okay, make sure there's more sell pressure than there's buy pressure, because we have tens and dozens of millions of dollars, and perhaps $1 billion in management, and we can funnel more, and we have our other rich buddies in on it too, and exchanges in on it. So if they all let go, I think price would probably actually go up. But so that is what I'm seeing right now. How does that tie into Ethereum? Well, I think Ethereum is going to move the exact same way. So I think these most probables for Bitcoin are these. I'm going to say I think they're the most probables for Ethereum as well, because they finally met in the middle, as I had been anticipating well before it happened. It happened. Is it clear which direction it's going to take? No. Is it clear it's going to hit this at all? It kind of looks like it does, actually. It looks like it wants to swipe down here. There's a lot of pressure down right now, folks. But the Wyckoff pattern number 2, so the Wyckoff accumulation pattern number 2 says that this is the ultimate low, and what happens next is just a choppiness until September 1st, and then you make higher lows, and then you break out somewhere around the new year, kind of like what I've been thinking the whole time. And if Bitcoin does that, I think this would be like the 3rd most probable or 2nd most. Honestly, I'm going to go with Wyckoff stuff. I think the 1st most probable is Wyckoff 1, 2nd most probable is Wyckoff 2, 3rd most probable is down below 20K to hit the 200 EMA. And then 2 what ifs. I don't know if I have 2 what ifs. Maybe that would be Ethereum actually pulls Bitcoin out from this market. They don't move together. But I think those are my 3 what ifs. Wyckoff 1 is the most probable, which means Bitcoin will do something that it's never done before. It'll rebound and recover and stay recovered after hitting the 89. Number 2, I think Wyckoff pattern number 2, this is going to end up being the ultimate low. We do have bullish divergence on the daily. Thank you for, I think it was a VIP member who told me that. Might have been a different tier, but I was pointed out by one of my patrons today that bullish divergence on the daily, which almost never happens. Bullish divergence meaning you have a low here and the lowest low on RSI. You have a lower low here and a higher low on RSI. That rarely happens on the daily chart. I think it's only ever happened once. And that was in 2019, right here, right there. This was the lowest RSI point, and this was the lowest price point and a much higher RSI. You rarely get bullish divergence on the daily. It's usually the 4 hour down to the 1 hour, even 30 minute. Like sometimes even, you know, like say this was a 30% correction, right? So take a look. This was a 30% correction. Yeah, I mean this right here was actually a higher low than the next one. So that's definitely not bullish divergence. So, but if you flip to the 2 hour and go back that far, you did see bullish divergence on that. You almost definitely did. I haven't back checked this, but I'm almost certain there was almost definitely bullish divergence on this, which is kind of showing my point that, yeah, so you have a low and you have the ultimate low, you have a lower low and a higher low, and you have another low that's lower than this one, and a much higher RSI as well. 3 strikes of bullish divergence on the 2 hour. It's probably on the 4 hour as well, but you usually don't get that on the daily. So the bullish divergence on the daily, you know, it is suggesting that, you know, perhaps this Wyckoff 2, that this ends up being the ultimate low. I don't know. It is possible that Wyckoff 2 is the most probable, and this is the ultimate low. First off, bullish divergence does not happen often. And when it does, you know, like even in traditional markets, because it's only really happened once that I can see in Bitcoin history, it has fantastic results. So with that stated, you know, even these Wyckoff orchestrators, they probably can turn on a dime and change which accumulation pattern to print, right? They can change it. They're really smart people doing this. So if they see that, oh crap, the mass psychology buy pressure from bullish divergence on the daily is going to make it so that if we try to tank it even lower, that we're going to screw ourselves, and their actually mass market psychology will overcome us, because so many people are looking at this, and that's what creates buy pressure, is a lot of people looking at the same thing, hitting buy. And so I'm kind of thinking that this, you know, my first most probable actually might be that this is the ultimate low. But I don't think that is even a flip of a coin probability, though. It might be something more like 35% chance. And then Wyckoff 2, which we hit the 89 EMA on the weekly, is maybe a 33% chance, right? So there's no one chunk over 50%. I think it's kind of up in the air right now, and I think the probabilities are a mix, which is a lot better advice than saying, oh, it's a 90% probability like I did the other day. I really apologize I did that. I won't ever do it again. But right now, even, you know, without my having been bitten in the ass by saying such a high probability, you know, even without having had that experience, I think in this exact moment, I would be saying probably about the same thing. The probability is pretty split, and it looks like kind of a no trade zone unless Bitcoin really breaks down below, maybe even here. But then again, it just could be that lower low, and it's all a trap. Like every single move is a trap, folks. So, you know, folks who trade by levels, you know, trade this level, I'm taking on a short, boom, right back up in your face. I think every single move here is essentially a trap based off of traditional traders' mindsets. Okay, looks like we're getting ready to fall off a cliff, you know, like all this support here, You know, and it even broke this too. So some people taking on shorts here, some people taking on shorts here, and they got screwed. This was like, it's all trappy. Every single move in a Wyckoff is a trap. And the cool thing about like these really smart people doing this is you get a trap this way, then you get a trap that way. You're just trapping the shit out of people. Like, you know, like they got to have a bunch of bear skin and a bunch of meat, you know, bunch of steaks from bulls. Hopefully it's a young bull who hasn't run around very much and it's soft meat, but they have a bunch of bear skin rugs everywhere with their gold teeth probably. They got grills in, probably have Bitcoin tattoos and just trapping everybody everywhere. And so, you know, I would be very weary of trading on those types of breakouts where it's more traditional to trade because everything is a trap. So if you're one of those people who trades like that, I would be pretty weary of doing that, especially seeking to short a low, like, which is typically if you fall off a cliff, okay, that's a great time to find it, as opposed to trying to trade in the middle of the zone, which is actually stupid. It's not smart to, so that's what all this is, folks. It's really challenging environment. It's really easy to make the wrong moves. And if you're holding a decent amount of tether, I mean, that could be among the best moves. This no trade is the best trade. This is a tough market. And right now, even though I typically I would prefer to, you know, trade ranges and try to long bottoms of a range, right? So after this huge breakdown, I don't want to look for more shorts. This seems pretty low to me. It could go lower, and sure, I could miss out on a huge move, but that's not my strategy. I would rather, after a big move down and it sets a range, I would rather short here, long here, short here, long here. So I would be rather more willing to take on a long here as opposed to waiting for a short to fall off a cliff, right? And even though I do not condone, I do not suggest using leverage in trading. It's a great way to lose your money, but that's my mindset because everything's a trap. So it's trying to trap bears to take on shorts because it's breaking below a support line, but then it actually goes up. So therefore, having long this line, which is kind of how I like to trade anyway. I like to have it work until it doesn't, right? And there are a few traders out there who say that, and I got that from them. I didn't make that up. It's just a well-known thing in trading. So it's worked. It's worked. It's worked. Take it longs here. Take shorts here. It's going to work until it doesn't. This is a perfect sideways range. Long here, short here. Do it again. Over and over until it doesn't work. And so, but at the same rate, the pressure is so down right now that a lot of my, normal signals currently are saying, shit, it really might fall below here. Like, I am honestly not comfortable taking a long right now. And it's pretty close to the bottom of the range where I'm usually comfortable doing it. But right now, I mean, a lot of my stuff is saying, this is not looking confident, although the range says it is. So that's kind of the point of trap, is it's all a trap. It's all a trap. Like this is not mass market psychology. So be really careful with this. But now you know my three most probabilities, which, to the chagrin of many people, it could go up, it could go down, it could go sideways. Yes, that is the answer. That is the answer. The thing is, which probabilities does each have? And if you don't have a damn good probability, like a 70%, then don't trade. But do trade when you do. It can always go up, sideways, or down. The trading is identifying how good of a probability do you have of this one happening, or of this one happening, or a part of trading is realizing they're all 33. Or something like that. Some version of it is 33. They're all 33. So it's a no trade. That's what trading is. You don't freaking pick one, right? So I've had a lot of people say, a lot of people come and share, like, oh, they think they're being really smart too. Like they think they're being sarcastic and like pointing out something stupid I've done, even though they're the joke's on them because they simply don't get it. Yes, so it just can't go this way. Like price can't go left, right? So the thing is, trading off of, how much of a probability does each of these have? And then you can even break it down. Maybe it has a 70% probability of doing this within a monthly time frame, but within the next 2 days on a different time frame, this actually has the highest probability. and learning the dynamic among which ones on different time frames have good probabilities. So it could go up on the monthly scale, have a strong probability, but then I'm guessing either sideways or down within the next 2 days, right? It could be both. It could be all three at the same time, depending on the time frame. So yes, up can go up, it can go down, it can go sideways. And right now, it looks like a wash, close to a wash. I would put maybe a slight favoritism here, but this is not good enough to enter a trade. All right, so those are my three most probables. It could go up, it could go sideways, or it could go down. Y'all just got typified.